looked at your bank account and wondered where all that money your business was supposedly making went? Then you're going to want to pull up your accounting software and get really familiar with financial statements. So far in this course, you have set up a business entity, started paying yourself, and learned how to set up budget goals and make financial forecasts for your business. Now we're going to help you use 3 statements: a profit and loss statement, a cash flow statement, and a balance sheet to get a solid understanding of your business's financial situation. Let's review the financial reports you know so far. Budget is goal setting. You should do this at the end of the year for the upcoming calendar year. Forecast is future planning. You should do this at least quarterly. And now we're going to add on 3 new ones. Profit and loss statement, also known as a P&L or income statement. Profit and loss is historic. It shows the profitability based on your business operating activity. You should review your profit and loss at least monthly. Statement of cash flow. Cash flow provides a real-time picture of where your money has gone, not only for business operation, but investing and financing activities of the business. It's a snapshot of what your cash situation is right now. You should review your cash flow quarterly with your forecasting. Balance sheet. A balance sheet is a carrying of all of your assets, liabilities, and equities for the business from inception. This gives you an overall picture of your business from its start. Reviewing assets, equity distribution, and contribution detail on a monthly basis is important. Many bookkeepers and business owners misclassify items on the balance sheet because they're rarely reviewed, which can cost you a lot of money and reduce your tax liability. Before we get in depth on each of these statements, let's talk about why this matters. First off, you go into business to make money, so you want to know where your money is and where it's going. Once you learn how to read a financial statement, you can look at it and get a pretty solid understanding of the upcoming and goings of money in your business. Second, you pay taxes on your profit, not the money you have in the bank. The IRS doesn't care if you spend it all. It still expects its cut. By looking at your financial statements regularly, you can make sure that you aren't shocked by your IRS bill at the end of the year when it's too late to do anything about it. Third, by reviewing your statements regularly, you're more able to pivot with the changing times and the ebbs and flows of businesses. For example, this can help you know if you need to switch vendors, cut costs, or if you're ready to hire that new employee. Now that you know the reasons these matter, let's dive into each statement. Profit and loss. Your profit and loss statement is probably one you've looked at before, most likely with your accountant during tax season. It gives you a snapshot of the history of money coming in and out and going through your business. A profit and loss statement will list your income next to your expenses and let you know how much should be left over. Profit or net income is your revenue minus expenses, and it's what the IRS taxes you on. Seems simple, right? Well, it doesn't take into account or consideration multiple other factors in your business, which is why you can't just look at your P&L or profit and loss statement. It doesn't show you the cash related to investments, equity distributions, and other important information. For that, you're going to need a statement of cash flow. Statement of cash flow. If you're a small business owner and you're freaking out because you've never heard of a cash flow statement, don't worry, you're not alone. Most small business owners never look at this report, but it is an important one to familiarize yourself with, especially as you grow. Cash flow statement. Look at your profit and take into account additional cash outflows to operating the business, such as inventory costs. For example, you buy $30,000 of inventory for the holiday season, but maybe don't sell it all. It doesn't show up on your profit and loss because you don't recognize the cost of that inventory until it's sold. If you're buying swag bags to give away for marketing, you can write that off immediately as a marketing expense. But if you are buying it for retail, you can only expense it once it's sold, which is why you need to talk to an accountant, bookkeeper, and tax strategist that all understand the detailing differences between retail bookkeeping and service-based bookkeeping, otherwise known as accrual versus cash accounting. Ask your current tax advisor which category you fall into. Principal loan payments, investment expenses, and activities like acquiring another company all have different tax treatments and accounting treatments. Financing activities, equity distribution, contributions. A statement of cash flow allows you to get a current picture of the whole financial situation of your business. Now into balance sheet. Balance sheet. Now let's go into balance sheet. A balance sheet is carrying all of your assets, liabilities, and equities for the business from inception. That's from the start. This is where you see depreciation of assets. You should review this monthly with your P&L and your bookkeeper so that it ties to your taxes and make sure that your balances each year. If you're a sole proprietor, then you don't need a balance sheet, but if you're a multiple member LLC, corporation, or an S-Corp, you will need one. Things your balance sheet can show your tax professional that helps them with your taxes. Did you buy a big investment like a car or equipment, computer? Did you bring a new member or investor into the business? Did you sell stock or repurchase stock? A balance sheet is a great way to know how your business is growing and where it's headed. If you put together your budget, forecast, profit and loss, cash flow, and balance sheet, you have a very solid understanding of the big picture and small details of your business. With this understanding, you can make informed decisions, not only when it comes to your taxes, but also day-to-day operations. It will help you know when to cut back and feel confident when you can grow. With this information, you'll be able to make estimated tax payments each quarter and work with your tax strategist to limit your tax liability. So stay tuned.